Ladies and gentlemen, welcome to Business Way TV. This is Vietnam edition. Today we'll discuss a very interesting topic, the real estate market in Vietnam, and it is my honor to welcome Mr. Ben Gray, the Director of Capital Market from Knight Frank, and he will share with us many fascinating details about this sector. Thank you for your participation. Please introduce yourself.
Thank you very much for the introduction. My name is Ben Gray. I'm the Director of Capital Markets for Knight Frank. We're a global consultancy, a global partnership that's been based out of London and the UK for about 125 odd years. We're new to market in Vietnam. We incorporated in February of this year. Myself and the other founding partner, a gentleman called Alex Crane. A few years in the making to get ourselves up and running, but we've both come from quite a deep experience in Vietnam, 20 years combined with the two of us. And we were very excited to start off with the new venture in February this year. We've grown rapidly already. We started off with two of us in the office, which was terrifying.
Yes.
Previously I ran Cushman & Wakefield, which was a much bigger machine. So it's very exciting to get into a startup environment in real estate. So we're very excited about the prospects for Vietnam in the upcoming years.
Yes. So based on experience on this market, so what are trendy in the real estate market now?
I hope I've got the experience to give you some good answers. It's an interesting market. The dynamics here are very different to some of the other markets that you may operate in regionally, for example. We always talk about sort of Vietnam on a macro level when you're coming into it, and post-COVID, the story's been very positive. I was with an investor the other day and they said, look, what did Vietnam do well to be able to bounce back so quickly? We had a V-shaped recovery in terms of the economic situation, if you like. And a very good point that everyone tends to forget is that in August of last year, there was around about 120,000 vaccines given out to the country of 108 million people. By January of this year, they'd vaccinated double dose nearly 80 million people. That's 116 needles in the arm.
Yes.
And they managed to do that because of the setup in Vietnam. We're a command economy. We've got a socialist economy, a command in terms of they can put all levers, and we are communist. So that means we've got the ability to react very quickly where other markets can't. So the mega trends for real estate coming down on a macro level. Why do people want to put money into Vietnam at the moment? Well, we're projected for a GDP growth this year of around 6.5%.
Yes.
Inflation, CPI measures in Vietnam, we should be running at around 3.5% to 4%.
Yes,
exactly right. And that's because the drivers here are the price of rice and price of pork and oil.
Yes.
If the price of oil stays the same, we'll be looking at 3.5%. My home market in the UK, if you're looking at the inflationary pressure there, we're looking double digits, if not more than that. The States, double digits.
Yes.
So if you're coming from an American market or European market looking into Vietnam, the fundamentals make sense. So in terms of megatrends, what do people want to put money into? The usual one everyone says is residential. Industrial is very hot right now.
Yes.
Again, through COVID, the complete collapse of supply chains, we used to be considered China plus one. Right? And the reality is now that it's not China plus one, it's Vietnam. So we've seen large multinational occupiers, users, etc., relocating out of China now with a heavy drive to invest into Vietnam. The biggest European one done recently was Lego. It was over $1 billion into Bin Dung. Well, there's a few tweaks on that deal at the moment. So we're seeing lots of money coming to industrial. Office sector is very interesting in both Hanoi and Ho Chi Minh. There's an undersupply of product, so we need more investors to come through to partner with the local groups. And then you've got hospitality and retail. Hospitality globally is a bit of an issue. Vietnam's got some questions on it, but still very interesting. Retail, that would be an entire different podcast to work out how to fix that. So in terms of the mega trends, industrial is number one. Coming through into Vietnam, very sector specific. We're looking at office, we need more money into that. And then residential probably second and third, apart from some local dynamics.
Precisely what you share. I think that also the government, they want to attract for more FDI. It means that there's more companies that want to implant their manufacturing site here, and that's the reason why industrial can be very hot. And
absolutely. Within actually the Vietnamese government's very welcoming to FDI coming through within restrictions, right? So we're very actually comparable to China in terms of the way capital can be put into work in this country. What drives the relocation from say China? This is always work with China for the basis. Our labor force is young. Our demographic profile in Vietnam is very positive. It's very, very young, highly educated, high literacy rate. It's the bit I dislike. It's a relatively low cost base. So we're now cheaper than China in terms of how much it costs somebody to sew up a Nike shoe or to do an H&M t-shirt or something like that. We're on a par. The only competition we've got in terms of labor force and cost of entry really would be India, and that's a very different market to work in. So in terms of proximity to Asia Pacific, Southeast Asia specifically, Vietnam wins out on those different factors. So where companies may have been hesitant pre-COVID, now they're very much putting their feet on the accelerator to actually get themselves a foothold in Vietnam or to expand their footprint.
Oh, as a consultant, I witnessed that trend, and as we see that there's more and more companies that want to put money for the investment in Vietnam, and especially for the real estate sector. So what are the challenges in the legal framework in this site?
Okay, how long have you got? That's probably the first question on that. Look, at a high level, the main barriers to entry for a company or an investment group looking into the market, new to the market, is actually understanding at a basic level how legal title works in Vietnam. So, as most of the people listening to this will understand, we have what's known as red books and pink books, and realistically speaking, the entire country is owned by the government, and they gift it to you on a leasehold basis. Freehold does exist, but leasehold basis. The challenges a lot of groups have coming through is understanding what happens to these leasehold interests when they effectively expire, and then what happens to them when they're holding it. Do they still renew it? How does that work forward? So basically, how do you own the land? That's problem number one. In terms of the overall framework, the biggest change I've seen since I got here 8.5 or 9 years ago was the Law of Investment 214/215, which opened up, allowed foreign investors to acquire Vietnamese companies outside of specific restricted sectors. So real estate was basically de-restricted to an extent. Now that allowed an opening of the market in the M&A space. So, the easiest way for the mature market investors to understand acquiring real estate is you buy a vehicle, a special purchase vehicle or a holdco. When they opened up the market 214/215, allowing 100% foreign ownership, it meant the groups coming through could buy office buildings or they could buy hotels cleaner. They didn't have to worry about physically transacting land. So it's been cleaned up over the years. The main restrictions in terms of the legal framework at the moment, it's actually not too bad. It's comparable to China. So I don't think there's too much to be worried about for the foreseeable future in terms of being able to put money to work, to buy land or invest into companies. The challenge that companies that are already here have got is they can't get access to capital.
I see.
And that's the biggest challenge we've got, is the framework around the lending space. How can foreign investors be able to put money to work funding local groups to build things? I.e., you have a very reputable Vietnamese developer investor. They may need a chunk of money to actually finish the construction off. There is a wall of capital in Asia that wishes to come into Vietnam to be able to put that money to work and support the sector. But at the moment, there's no real framework to allow them to what they call perfect security, to mortgage land, for example. It doesn't exist. So for me, the next couple of years, that's the one bit for investing into Vietnam that the government does have to seriously look at. And they're already signaling they're doing that. So they're moving forward in the right direction. It's kind of about right.
I think that the government is preparing for some new law in the real estate sector. There's some suggestions about the ownership of the apartments.
Sure.
Yes.
Okay, that's very interesting. Now that's been signalled that they're considering some ways to try to cool what they feel will be an overheating sector. Now, Vietnam's quite a unique market compared to others that I've worked in. There has been what's been described as land fever over the past, let's say, 2 to 3 years. What's driven that land fever was the government going through and carrying out a top-to-bottom review of what they called the land use rights certificate transfer process, with very good intentions, and that was to stop corruption. Unfortunately, that effectively stopped the entire transfer of land for a number of years. So projects that were being delivered, we saw a very, very sharp increase in the sales prices. The demand's always been very, very high, and that pushed it to a point where it's getting a little bit frothy or bubbly. So the government's looked at it now and said, okay, what's the easiest ways we can do that? Well, we can use a big stick. And the big stick is saying, how about we tax second homes for retail investors? And we can tax them either on capital gains on an annual basis, or we can tax them at the point of sale. Now, that would be a very large stick to the market, and they're signaling that they're considering it. But what we kind of feel will happen now, post-COVID, opening back up again, is that we'll start to see more product being delivered, we'll see more supply coming through, we'll see that supply being absorbed, and we'll see the prices start to stabilize.
I see.
Okay, so I think we should be okay.
Yes, so you say that when the government want to put a sticks on the residential market, and according to your expertise, currently, what's wrong with the residential market?
A lack of supply. So there is a fundamental need across the country for more residential product, and we have a very swiftly urbanizing population moving to the major capitals, north, south, Hanoi, Ho Chi Minh, also Da Nang, Nha Trang, all the way through down, and there's a lack of housing for these guys and girls to move into. Now, fundamentally, I think what's wrong at the moment is there's a lack of supply for the affordable sector.
Yes, affordable sector.
And the question I've always got at the moment is what is actually affordable now, right? So when I first got here, affordable was $450 per square meter. If you have to look at the value of land and what people have to pay for it, they cannot afford to build affordable at $450 to $500 a square meter. They need to build affordable now for Ho Chi Minh at probably $800 to $1,200 a square meter, $1,200 a square meter. That's not affordable. So the lack of land that can be converted into residential from its existing use, and the time it takes with the current process from the government to go from agricultural to residential, is too long.
When the price of the residential land is so high, it means that it also raised the price of the industrial land. So, according to you, what are the important criteria for industrial land in Vietnam?
You're spot on about the price increases in industrial.
Yes.
It's not quite land fever, but it's getting a bit difficult. Look, the prime drivers for it's real estate, right? It's not rocket science. Location. So, industrial land that's located to close or near, very, very near to good infrastructure, good power, good amenities, close to a workforce that's highly trained and readily employable. That's always going to work out. The challenge we've got in some of the provinces close to Ho Chi Minh is that the land use rights certificates, the titles, are getting short. So some of the older industrial product, land, warehouse, etc., might be coming down to as short as 15 years. So when it comes down to this kind of length, the question is, will that get converted into residential? So what we're starting to see is speculation. We're having investors from, mom and pop all the way through to very high net worth families to investment groups acquiring land bank. It's driving the prices up again. So this lack of supply of cheaper product now means that well-placed industrial park land, if it hasn't been converted and done already, is now reaching a point where when they build the product, the warehouses, occupiers coming through can't afford to rent it. I see. So the question that is always asked, well, what happens? So the investors have to take a haircut. You won't get an unleveraged IRR of 15 to 18% anymore. It's going to come down to 12%. So the investors have to take the haircut. The manufacturers coming in, the end users, they have a finite point they can pay. Vietnam has a finite point that it can pay before people say, actually, Bangladesh is cheaper. So that's the challenge again. Supply coming through, land prices going too high. People need to build a product that's still affordable to the occupiers coming through. So again, give us more land.
Yes, for sure. With the FDI attractions from the government, there's more and more companies that come to Vietnam to organize the manufacturing site, and it means that we always need more lands for the industrial purpose.
Absolutely. And the big sources of FDI coming through, your Legos, your Apples, etc., Pegatron relocating over here, they work with existing IPs or industrial developers who have already acquired land. So they're able to come through and say, look, this is what we need, this is the kind of facility we need, this is the rent we can pay within a spread, and they can work it out. The very, very large groups when they come through, your Samsungs, etc., LGs, they operate at a level where they can sit down and get additional incentives from the government. I'd love to know what the incentive package for Lego example would have been in Binzhong. It would have been pretty tasty, I think.
What I learned about Lego factories in Binzhong is that it will be a green factory.
Sure.
Means that environment become a criteria.
Mm-hmm.
Then what do you think? Why companies need to pay attention on the ESG value? It means environment, social, governance part of the land.
I would this is always interesting. When I started out in real estate, that wasn't a concept. When I got to Vietnam, that wasn't a concept. Now, what's driving that is, on a very, very high level, is who is funding the companies when they come in, right? They have a duty to their shareholders or in their investors. Those investors now, the money comes with a price tag in terms of returns, but also in terms of environmental impact that it can make. So if a industrial park is building out a product that would have matched the market 10 years ago, so hasn't got the environmental credentials, isn't LEED or BREEAM accredited, for example, can't demonstrate that it's got very good efficiencies in terms of heat or cold, hot, cold, keep itself balanced, maybe solar on the roof, they will not be able to attract the multinationals anymore. And that's not just for industrial, that's across the entire market. So our large multinationals coming and looking to occupy office space, for example, they now will only look at buildings that are certain accreditation, because again, that's what they have to do. So if they're not if invested developers are not producing product now that does tick the ESG boxes, it will not be able to attract the occupiers anymore.
Thank you for your sharing. It's enlightened me a lot on the current situation of the market, and thank you very much.
My pleasure. Thank you very much.